The millions of meme coins will probably end up worthless. The SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Cathie Wood, the founder, CEO, and CIO of ARK Investment Management, is known for her bold predictions and disruptive investment strategies. In this Bloomberg Crypto interview, she shares her perspectives on Bitcoin, interest rate cuts, specific stocks, Donald Trump's crypto stance, and the meme coin phenomenon. This summary breaks down her insights, offering investors a structured and comprehensive understanding of her viewpoints. Wood discusses the rise of meme coins, cryptocurrencies that gain popularity through viral internet memes and social media trends. Meme coins are often driven by strong online communities that promote their adoption. Meme coins are known for their extreme price volatility, making them risky investments. The value of meme coins is often based on speculation rather than fundamental factors. Thoroughly research meme coins before investing, understanding their purpose, community, and risks. Only invest what you can afford to lose, as meme coins can experience significant price drops. Limit your exposure to meme coins and diversify your portfolio with more established assets. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel.
Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds. Because I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem. I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins. The millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying, and we think they're going to become very important in the years ahead. Meme coins, not so. Meme coins will be collector's items, so digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, that that's just a step too far, and that most of them are not going to be worth very much. I actually think it's very complicated, but in terms of our own venture fund. And we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. You know, when we hear Larry Fink of BlackRock saying he wants to tokenize everything, you know it's big because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes as well. We're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. Most of us don't have very many credit cards. So we're looking for those winners. And, you know, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them have to, Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners.
I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Sonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up. We post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period. One of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession, and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down, and we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening. Well, we tend not to be very short-term in our focus, but if we're right, and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts. The Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in.
In conclusion, Cathie Wood's insights offer a valuable perspective on the future of investing. Her focus on disruptive innovation, Bitcoin's potential, and the evolving crypto landscape provides investors with a framework for navigating the changing market. By understanding her key themes, strategies, and cautions, investors can make informed decisions and position themselves for long-term success.